but then you get the money to put up the building. And so you run the business in order to pay back. So these things are there, and in Ghana it is there. So depending upon the extent of job you are doing. But again, it is wise to go in for a bond if you have other sources of, let's say, revenue. If the hotel is the only one that the money is coming in, it is too risky. So once you are picking bond for this hotel, it means you have a shipping line. It means you have some shops in town. So in case this hotel does not start well, the interest payment will be coming from your shipping line, will be coming from your oil line, will be coming from a fuel line. So that you don't put yourself under too much pressure. So you must do the calculation well before you go. So don't always be interested in just a loan, but be interested also, and as I say so, make sure you are also faithful and loyal. Make sure when people give you loans, you pay. The other source of credit which I can share with you is suppliers credit. I know a Chinese lady who is now running virtually a multi-million business in Accra. And this is how she started. She came in as an interpreter for some Chinese businessmen. She could speak a bit of the English. She came to Ghana with a spouse, so she was going around the ministries doing her business and all that. Then one time, the Chinese company says they are going back to China, and she said she preferred to stay. She said if you want to stay, then stay. Our company no longer needs your services, so now she must survive. What she did was that she went to the Ministry of Energy and asked them at the time what the need of Ghana is after going around the Chinese people. You realize that at the time, Ghana was going to decentralize the petroleum sector. So a lot of people were coming into the sector. So what we need as a country would be tankers. So they told me, oh, if we get tankers, it should be good for that industry. All she did was to pick a call and to call a company in China that produces tankers and told them that if they brought 100 tankers to Ghana, she can make sure that they are sold. And so they must give her without a peswa. The Chinese company agreed, and she put $10,000 on each of the tankers, and they supply 100. By the time the supply came and she sold, she was $1 million rich. And it's because she was faithful. So the reason why sometimes we don't do it in Africa is just that the banks don't trust us, or even sometimes suppliers. So we must also build a certain level of trust. You pick money, you pick goods, go and pay. Even if that's the last one you must even eat. It's better to settle a debt and have a good book than to live in riches and you owe everyone. You don't grow in business that way. So once you go into debt, please be mindful about the level of your faithfulness. I was speaking about applying back. So applying back your profit is key. It's one way of growing your assets. If you want your business to grow, we spoke at the balance sheet. To grow your business requires that you keep. But certainly you are a human being, you are a rational economic being. You want to take back. But take back, have a good, let's say, ratio of let's say how much you take. And be mindful of your private goings. Mainly your business with your family life, your children's school fees and all that. It has a way of making you take more than you deserve. So when the accounts are prepared, you'll be able to tell the exact amount you have made in profit. Then take a decision on that exact amount so that you don't eat into your profit. We also make investment decisions. As I said, so as a businessman, you are thinking of buying new property, starting new projects, starting new lines, buying land and all that. So these are things you do. Again, make sure you are able to appraise them well. There are some businessmen who veer into new businesses, and that is the beginning of their going down. UT Bank would have still been UT Bank if they've not diverted into other ventures. There are microfinance that went down because they moved from the microfinance into real estate. So you go and put $5 million into real estate only for another chief to appear that the land is mine. You took our deposits to invest. Then you went into a land and paid $1 million for another chief to appear and say the land is mine. And once you cannot develop those lands and sell, you can't pay back investments. So make sure that when you have a business that is doing well, maximize the benefit on that business. Take your time and maximize all the benefits before veering into other, or veer into others in a way that allow you to have a leverage, allow you to maximize. So you have a drinking spot. It's easy to add let's say a kebab or a chop bar, because they are related. You have a school. It's easy to add a hostel. They are related. You see, so be careful. And also be mindful investing in what others are doing, which is what is killing our businesses. The God's grace on the person is what John is doing, I cannot do. So I shouldn't look at John's lessons and say, into John Pan John Kwawos Kwano ni madena mi madesen. Na John Crack come no and the so many. So do what, as you try to invest, do what is nice and what your abilities will allow in order for you to maximize. So these things are very key. Or else you may find yourself eroding the finances, because the effect of one business on the other sometimes are seriously linked, right? And so be mindful. We are not saying don't go into other businesses. But we are saying that do the appraisal well and be sure that the outcome will be as good. Anybody has a question? I seem not to be getting questions. It's either you are really enjoying me. All right. And so when you come to investment, we are saying you can look at a method like the payback period. How long it takes you to get the money, let's say back. If you put up, let's say, a hostel, the rent that you are getting, how fast would that be in order for you to recoup the entire investment? We also have net present value and return on investment that we use. So these are things that an accountant can allow you. So seek the right advice before you put your money anywhere. Your returns are key, as I've told you, but be careful with you taking, let's say, out. That's what we call the drawings. And I can say a drawing means that you are taking out after the business for your private use. Anytime you take anything from your business to use on your private person, you are eating into your business finance. Anytime. Or anytime you use the business, anything for so you buy electricity for a business and the extension of the wire is coming into your room. You have a store and there's some extension to your room. What you are doing is that you are eating, because that amount of energy could have given you a business income. But now you're using it to power a microwave or let's say a freezer. So see, you are not using all the power to make the business. So be careful. Have a clear distinction between what is business and what is you. You take business, let's say money, handed let's say Ghana, to fuel a car. And the car is moving in Takoradi in the home of all your girlfriends. How does that lead to sales? The 100 Ghana should have been money for the business, you moving from a customer to a customer looking for business. But you put the 100 Ghana CD and you are all over Takoradi. Or you take business money for business development and you are sitting on the beach here. You are spending on yourself. Unless you are here talking to White or somebody on business and see how best you can get new business ideas. But if you take the money and sit here with your friends and blowing beer, you've taken money and the money is not yielding any returns. So please be mindful. That's why we're saying that because you want to do that, give yourself salary, and so that you spend out of your income when it comes to your private issues. So it becomes a very important thing. So there are also ways of measuring our returns, and the higher these ratios are, the better, right? And so when you buy and sell, the initial profit you make, the gross profit, you bought this at 5, sold it at 8. So the profit before any expenses was 3. So 3 divided by 5 is what we call the gross profit margin. The higher, the better. If it's higher, that means you have more money to take care of all the other indirect expenses, right? If you also took all the expenses out of the 3, you had a profit of 1. That's your net less a profit. So net profit, that is 1 over 8. Will give an idea as to how much you are making, right? So the higher, the better. So you must always be looking at how best one maximize profit. If you maximize it, then you can take care of all the expenses and have some left to grow the business. So please and then even your assets as well. All the assets you have quite spoken of, each year express your profit over the assets. If it's higher, the better. What it means that, like Ghana Commercial Bank, you have, or like State Transport or Ghana Post, they have all, even Vodafone, they have all the branches and all the shops. Those are the assets. So if you have assets of let's say 100, let's say 1,000, and your profit is only 50 Ghana, it means with all these assets you have, you are making so little an amount. It's not good at all, because your assets should lead you to make more revenue, right? And so how do you use your assets to generate more revenue? So maybe it may be nicer for State Transport to begin to lease these stops around for rental income than keeping them as a bus in the terminal. It's good for them to stop at the roadside and draw the people and rent them out to get more in the money. Than keeping them, you can't maintain them. It doesn't give you any additional income. So find ways. So some of you may have excess space. Rent it. You put up an office complex and you have excess space. Rent it. Some of you are putting up maybe a single, let's say, story. Why won't you do it about 3 or 4, let's say, story? By the time you finish, you have a neighbor, another businessman. So, can I rent the second floor and third floor? The income from there may be used to maintain the building. So you are saving on maintenance in a cost. So you are doing a 4th floor, increase it to 5. For all you know, that additional 1, which you don't need, the revenue is what to pay the electricity bill on the 4th floor with all the air condition. Give you money to also pay for the maintenance. So you are saving your money some extra amount just because you have a single floor. And so when it comes to investment, you think of all these things. Again, be talking to your engineers and architects. I'm told that the cost of a lift in a 4th floor building is the same as having it on a 7th floor. It's the same thing, yeah. It's amazing, but these are things we don't realize. The energy that will go to 4th floor is the same energy that will go to the 7th. So why do you leave the building at 4th floor? Because almost immediately lift HM. But lift for 4, and the same lift now cost 7, without additional cost. So then if you have foundation you bet my twaso ako 8 in future. And that extra income will give you extra income to finance the business. So these things you must understand, and life becomes easier. I'll be finishing soon so that Prof will come. So basically, drawings are terrible, and we must. Then, depending upon what finance you are looking for, it has tax implication. Depending upon what business finance you are looking for, it has tax implication. If you go in for debt financing, in debt financing, you pay interest. When you go for a bank loan, you pay interest. The interest you pay on a debt in taxation in Ghana is something you can deduct out of your revenue. Right? And so when you go for a debt financing, the interest reduces your taxes. But it does not mean it reduces the burden of paying a loan. So the burden is still there. So you still must be mindful about what interest you pay. If you plow back your profit, you don't pay any tax on that plowing back because you have not taken out. If you take out of the business in terms of dividend, then you pay a dividend a year tax of 8%. Anytime you draw a dividend, you pay a dividend a year tax of 8%. So these things are there, and you need to do the plus and minuses to tell whether you're going for debt, whether you plow back, or whether you go for dividend or not, or not. So basically, if you're going for a bond, the same idea. The bond, the interest you're paying on the bond, the interest that you're paying will be tax deductible. It means we take that out before we compute your tax liability. So that's basically the effect of taxes. So this brings me to the end of my two topics for the morning. Is there anybody with a question? Yes.
My name is Joseph.
Yeah, Joseph, right.
Yeah, with regards to the bank interest, assuming the bank uses a straight line method in calculating the interest, wouldn't it be prudent for me to pay as it has been calculated for me?
Yeah, the bank can still do a straight line, but usually the bank don't use a straight line. But assuming it was a straight line, depend upon who is calculating it. Some people are terrible. They do a straight line on the principal amount and divide it. It's a very crude way. It should still be straight line on the balance that is left. Right. So if it's a straight line with a crude way, they do so because they think you are not financially literate. Right. But ideally, it should be straight line on the balance that is left. So in our case, yes, you are right. Assuming is that then you're right. Right. But still, then you are not really making a gain. You are not making a gain. But then what you can do in finance is that if you have extra amount to pay, you may not pay. Put that money in an investment. So put that extra 100 Ghana in an investment. That investment will give you another interest income. So you see, if I pay the interest to the bank of 8, and I'm getting the interest income of 1 on the excess amount I could pay, then I've